Hello, everybody. My name is Alesh Eisner, and this is my friend Rob. We thought we would do a something a little different this time, a bit of a podcast format. So this is going to be a series of 7 questions in part one, 7 questions in part two. We'll just read out the question, and then we'll both answer it. We'll debate. We'll ask questions, and hopefully everybody will get some good value out of it. So question number 6, I think we kind of covered this, but just to make sure. So for your real estate holdings, do you manage the properties by yourself, or do you utilize a property management company? So just
Yeah,
to
so
recap.
I mentioned before, for the local ones, I do it myself because I enjoy chatting up with the tenants and checking out on the pets or or the kids or whatever. As for things in Hong Kong and China, I outsource it and I pay kind of like a 5% fee for this whole management and collecting rent and just changing bulbs or whatever, and I'm happy with that. I don't really plan on selling them anymore because they're maybe 25% of my portfolio is not like 50%. And as I mentioned before, the real estate game is like buy and hold forever. And I do it for the capital appreciation. And right now the rental income is covering all the mortgages, so I just let it ride.
Okay, no, that's good. So you found like a handyman kind of person that will also show the property in China.
Yeah, yeah. It's like a one-stop shop. They do everything,
Yeah.
and it's like if they do it properly, things are pretty cheap. I think their fees are like half month of rent per year, which is what 112, 124th, so 4%. And the repairs is really cheap in China. You paint the whole like 1,000 square foot place for maybe under $500 Canadian. like like that's the normal rate. So the management side shouldn't be that much, and as opposed to like some places in the states. I think I looked at one where you have to pay for like air conditioning fees or something. Like it was a place in Orlando, and then every single month you have to keep the air conditioning on because the place is so humid.
Mm.
And just that fee itself is another $200 per month US.
Yeah.
And the strata fees is another 300. But then the rental fee, rental income, I think it was only like 1,100. So half of it is gone to these fees.
Hmm.
Like that ratio itself doesn't make any sense to me. So I didn't really get into that property.
Yeah. It has to cash flow, right?
Yeah.
Yeah.
Yeah. So what's your take on the management side?
Yeah. I was going to comment on something else, but it dropped out of my head. Yeah, so I do have the property managers for all the U.S. properties. As a foreigner, I wouldn't be able to actually do any other work, even if I did want to fly down there. Um, oh, this is what I was going to say is a friend of mine is looking for an investment property out in Poco or Port Moody or somewhere out there, and he wants to manage it himself
Yeah.
and or even as far as Chilliwack, for example, and he lives in Poco. And so I always ask him, if you get a good tenant, you won't have to go out there at all. But if you get a
Oh
bad tenant, you're going to be driving out
yeah.
there. How much is your time worth? Right? Because he has 2 kids, wife. He works a regular job. So how much is your time worth in order to be doing this? So like if you actually enjoy it and you like talking to the tenants and taking care of things,
Yeah.
then that's fine. I have a feeling my friend wouldn't, and so I'm kind of suggesting to him, okay, you're gonna get a property out in Chilliwack, and you're gonna be driving out there, and you're gonna be like the whole clock toilet thing. I think the tenant should actually take care of that. That seems to be the cliche. Are you going to be unclogging toilets? No, no, I'm not. Uh, But like for me out in the US, everything gets charged for. You know,
Yeah.
plumber goes out there, $200. Electrician goes out there to fix a flickering light bulb, $150. Like everything gets charged for, but I don't have to do it.
Yeah.
Obviously, I couldn't, but it, and I mean that 2 to 3% that I mentioned is still after all of these expenses, right?
Okay.
I mean, the rent is actually quite hefty as a percentage of even what the property is worth currently, let alone what I paid for it. But by the time you know, in Arizona and Las Vegas, hot places as well, air conditioning goes 5, 6 grand, boom, right there, right? Half the year's rent is gone,
Yeah.
or a third, depending on the house. So, anyways, yeah, I yeah,
Another thing I want to talk about is
sure.
with these rental properties, if you want to do it yourself, and you that the whole screening tenant portion, you should spend more time on it.
Hmm.
Actually go through the criminal checks with the pay stubs and calling their employees. Just it's worth the extra hour to do all this,
Yeah,
because there are a lot of people who just who just rents these units and sublet on Airbnb or do other business in there that they can get much higher return in. So they kind of, so you take on all the risk and they take the reward. So you need to see past all this and just find individuals who actually appreciate living in your place. Like sometimes you don't need to find like the ones who's willing to pay the highest rent, but you want the one that has a good track record. It's kind of like with picking stocks. You want a good track record of like dividend payouts.
yeah,
That's
yeah.
how I look at things.
Yeah, dividend increases, increasing revenues, increasing profits. Yeah, absolutely. Uh, yeah, the tenants. So I mean, for the U.S. properties, the property manager screens them.
Yes.
Depending on the state, they let you know different things. Some of them actually send you the whole write up, and some of them just kind of say, okay, this is their credit score. They have a dog and 2 children. Do you want them or not? And
Yeah.
I'm like, well, okay. Uh, like for me, every time the renters change, it's repair costs, some of which are covered by the renter's security deposit, some of which are wear and tear, and I'm responsible to pay for them. Then it's additional fees for advertising, and you know, the place is empty for a month, and so if a renter wants to leave, I'm like, no, I'll charge them less rent,
Yes.
have them stay.
Yes, for sure.
You know what I mean?
For sure. For sure.
Uh, I think Vancouver has lower vacancy rates, so probably it's easier to find a renter. But there's always a gap where you're not getting paid, and I mean it's in hundreds of dollars plus repair costs.
It's yeah. Whenever you change tenants, I think like the shortest gap you can have is like a month. So a month of rent is already 8.5% of your your rental income.
Yeah,
So I know some people they like to like max out on the rental income, but for me, I have contracts which are like 3 years out, like 3 year contracts that I'm not gonna increase the rent at all. As long as they're locked in and they pay every single month, I'm more than happy to do that. Like instead of like increasing 3% or 5% every single year and finding a new tenant and possibly like furnishing the place or unfurnishing the place is just so much work, and painting the walls, putting I don't know, like filling a hole or whatever. It's better to find a long-term tenant. Then that's why my approach to it is making friends with the tenant and make them as comfortable as possible, and so they can just live there for 10 years. That's my plan.
yeah. And you know what? I've talked to various people about this, and like I knew a guy who had a tenant who lived downstairs, and he lived there for 10 years, and
Wow.
that was like 5 years ago. So I bet that same tenant is still living there,
Oh,
still paying $1,500 a month in rent. and they invite them for Christmas dinner,
Yeah.
right?
Yeah.
Uh,
And then they fix your light bulbs and then to
yeah,
put OLED, they just do everything themselves.
well, it's a different story if they're living downstairs in a basement suite versus if you have a separate house.
Yeah.
I've never really wanted a tenant to live in the same place. Like I've never wanted a roommate or a tenant, even if they're separated, in the same location. That's just a personal preference. Like I don't know the person. I want to be able to sleep at night without locking my door, that kind of thing.
Yeah.
And so, different people have different preferences. A former coworker said that he has a tenant that he likes and he's charging him very little rent. Like he's actually losing money every month, not even over a year after you count in property taxes and so on. But he's like, every month I'm actually losing money,
Yeah.
but I'm kind of making it up in the appreciation of the real estate. Like,
Yeah.
okay, not the usual business model, but that's what works for you, right?
Yeah.
Number one is cash flow. But anyway,
But their definition of losing money is just on paper because the mortgage payments, like maybe one third of it is for interest, and all the two thirds is for going back to the principal. So if they calculate it that way, there's no way they're losing money. If they're just factoring in the rental income and covering the interest, and it should have a little bit more there, but it's just due to all these management fees or taxes that it seems like they're forking out money.
yeah, usually when you're calculating cash flow, I believe most people take the mortgage payments, which include both principal
Yeah.
and interest. I guess if you have a HELOC on the place and you're only paying interest, then that's what you would be, I guess, calculating.
Yeah.
The HELOCs usually have higher interest rate, so it usually ends up roughly the same. But I just remember there was an investment opportunity by a professional company out in Calgary. They had townhouses, and they said we're one stop shop. We property manage it, and they showed you a breakdown, and there was a cash flow of like $20 a month, like just squeaked out a cash flow. And when you actually read into it, in that particular prospectus, they had that uh, the principal pay down was being used in order to help it get that 20% or that $20 down at the bottom. So they were only counting interest as a negative,
Yeah.
and they were excluding the principal pay down from that, and you were getting a credit for it. So I'm like, I think you're actually going to be negative because you have to pay the whole amount. Yeah, you're building a principal, but every month you're going to be negative.
Yeah.
I think they actually forgot to include insurance, which meant you definitely were going to be negative. So yeah, these sort of vanilla investments, uh, like most people should be able to run property by themselves. You don't need a you know, what do they call them? The dumb doctor deals.
Oh.
Have you heard that term where it's like an investment where somebody just is going to write a check? They know nothing about it. They just want to write a check and they want a bigger one in a few years.
Oh.
And they don't know anything about it. This was a dumb doctor deal where it's like, oh, looks like I'm making $20 a month, great, and they were just supposed to buy it, but it was, I don't know, it was going to work out very well. And this was before the oil crash as well. It was out in Calgary. So all right, we have one more question. Is it my turn to read? I forget.
I can read it off.
Okay, go ahead.
Since we talked about real estate, what do you think about the Canadian housing market? Do you foresee the Canadian housing market going down in the near future due to the recession and such?
Uh, yeah, for the Canadian housing market overall, I can't really speak. I I think Edmonton and Calgary in general would probably be good places to buy right now because of the oil issues. Whether those are ever going to go away, as per my previous comments, is a different question. If I can talk about Vancouver, Vancouver is overpriced for an investment if you can't make it cash flow, which I don't think you can. Buying in Greater Vancouver wouldn't be a thing for me. Like, I don't want the rent to just cover the mortgage, and then any repairs are coming out of my pocket. And um, like, if I bought something in Surrey right now, I feel I would be subsidizing the renter, which
Yeah.
I don't feel like subsidizing a total stranger, or even a friend, as as you say. If the prices were to drop significantly, and it doesn't feel like they're going to, but I don't think they're going to go up either. I think if you bought at the peak, it's sort of going to go flat, maybe slowly down. Like, even COVID didn't do much to it. It seems like.
Yeah.
Um, so I don't think buying something local is going to be in the cards for me. But you know what? If I bought a tri or a quadplex in Surrey, live in one. This is the house hacking that people do. Is you buy a quad, you live in one, and you're basically living for free, and the others are paying your uh, your mortgage and everything. Uh, but yeah, finding a place that cash flows, I think, is next to impossible. Like, I've gone to a few real estate seminars where realtors victoriously held up a prospectus of a house that supposedly cash flowed that they just sold. But I'm like, yeah, okay, if you say so. That was a well kept secret, that one.
Yeah,
Uh,
these
so
are what we call fabricating numbers because they can easily get a tenant to pay a little bit more in rent, but then they actually subsidize them in the bottom and the other side, where they pay all the utilities, they pay all the internet, and they feed them food even. So so they kind of build up this rental income to
could be.
sell this property. Yeah.
Could be. I don't know if it was fudged to that degree, but um, I for a little while there, I don't know if you're familiar with the term bird dogging, or um, they're basically people who find real estate deals for investors.
Yeah.
And so they have a network, and somebody says, okay, I want to sell my house. They put it under contract, and then they bring they bring this deal to an investor, and uh, they'll take some sort of commission, whether $5,000 in cash or a percentage or whatever. And I had met one of these people, gave them my card, and they said, oh, there's a house in Surrey that's for sale. Are you interested? And they kind of gave me the numbers, and I'm like, this isn't going to cash flow. If I'm paying a mortgage, there's no way this is cash flowing. And they said, well, you told us you would buy for cash. And I'm like,
Yeah.
yeah,
Yes.
but the term of cash flowing, as we said before, it includes paying a mortgage. You can't be comparing apples to oranges. Anybody who's alive should be able to make a paid off property cash flow.
Yeah.
Uh, so anyway, I didn't hear from that. Well, they're also called wholesalers. I didn't hear from that wholesaler again. I'm like, that place doesn't cash flow. Like, it's way too expensive. I, yeah, I'm not going to pay for it. There's an opportunity cost when you're paying with cash, right? You
Yeah.
should be able to invest that money somewhere else and use leverage.
Yeah.
You're paying for the leverage, but if you're not cash flowing, then
Yeah, and that's the definition of like buying real estate is the leverage game, right?
yeah, for sure. That's
By default.
one of the guys in my in the investment group. He's more into real estate than into stocks. We just talk about stocks, but he's more into real estate. And he's like, yeah, cash on cash, I'm getting 20% returns, 25% returns. And it's like, because there's a huge amount of leverage,
Yeah.
right? The money that he put in, he's making a lot more on it because he's borrowing, and he's just able to cover the interest. So,
Yeah.
but anyway, what about you, about the Canadian real estate? What do you think the future holds?
As you mentioned, it's hard to find places that cash flow positive, and this is like the stock market analogy. If the stock doesn't pay dividends and is not really appealing, and so the only upside is for speculative, like being speculative and having like for my instance, buying a lot and turning and having it turn into like a row house where you get more units in the same piece of land. I mean, and those kind of deals I would still look for. There are some like older condos that's like 50 years old, and they have 3 stories, and then hopefully someone will buy it, and then we build a high rise out of it. Like
Mm,
there are these type of opportunities, but these are like capital gains. It is not shooting for rental incomes. You do have to subsidize it, like you say, and but the upside, like it could be 50% in like 3 years. And yeah, there isn't too much like in the real estate side I want to get into, especially with this COVID thing, where people can just work from home. So I think the whole downtown like district, the rent could come down a little bit because no one really needs to be there.
no,
Like, that's my opinion. I don't
okay.
know. And I own REITs, which is real estate investment trust stocks, and they pay a good dividend in the residential sector. That's the only type I have. I don't have it in the commercial or industrials. Um, yeah, that's the whole landscape. I'd say, and in Canada, I mean. But I do have friends who see deals out in I think Windsor, Ontario, that still gets you like 7 to 8% cash, like uh, like positive cash flow with the leverage and such. But I I don't know. It's I like to be able to see things and like see how the economy can boom over there. But I don't know. Maybe the story, maybe everything's priced in already. I just don't see it too appealing, so I wouldn't get into it.
Hmm.
Yeah.
Yep. So it sounds like a little bit further east that there might be some opportunities.
Yes, that's my feeling.
Yeah. I mean, Vancouver and Toronto have gone up significantly in the last 5 years, give or take, right? I mean, there've been huge gains. So I kind of think different areas kind of take turns, but I mean, it's also influenced by population movements, which is influenced by resources. So like oil being the obvious one. So yeah, it's hard to foretell the future. I think real estate over the long run goes up roughly at the rate of inflation, so maybe 3%, maybe 4%. That's kind of the appreciation of real estate. So if it cash flows, you're getting that 8% total return maybe.
Yeah.
Uh, I'll go back to my thought of comparing it to dividends paid by Canadian companies. The rental income is taxed fully, like salary or wages, while the dividends are hardly ever taxed. Like you can make $50,000 worth of Canadian dividends, and there's like no taxes on it.
Yeah.
So that's from a tax perspective, and you can get 5 or 6% dividends rather than 3 or 4 that most of us are lucky to get as far as cash flow. So Uh, but yeah, I mean, there's something to be said for the diversification. The REITs, because they're publicly traded, something happens in the world, Russia invades the Ukraine and the REITs still sell off, even though they've got absolutely nothing to do with Russia, Ukraine, or
Yeah.
war.
Yeah.
So it's kind of I wouldn't count them as diversification necessarily because they are publicly traded.
Right.
So all right. Well, I think we've done
Right.
7 questions in two something hours. So we'll kind of end the podcast or the first part of the podcast here. So it has been Rob and Alesh. Hopefully, in our stream of consciousness talking, giving you some nuggets of information. Rob, you have any parting thoughts for part one?
Look forward to part two. I mean, there's gonna be a lot of exciting parts to part two, and check out our channels. Alesh with the Canadian Money Talks and me, the Mindful Investor. You can find the links down below if you want to check out our other videos. And remember to like the video so more people can see it. Subscribe to the channels, and we'll see you in the next one.